Hi, this is PR Sundar. Welcome to question and answer session. And do you know when Bombay Stock Exchange of India was formed? It was formed in 1875. It is one of the oldest exchange in the world. Do you know when the Sensex was formed? Most people think it was formed in 1979. That is not true. It was formed only in 1986. But it was calculated by taking 1979 as the base year with 100 point as the base index. Let us go to question answer session straight away. There are many inquiries for options trading workshop. Last time when we launched the workshop, more than 350 people have registered within few hours, and now only we have cleared all of them. By next week I will be clearing all of them. So we are launching the registration once again, and you can check in the description. You can go to workshop.prsundar.com to register. Please remember, this workshop is for option sellers, and option selling needs large capital. Typically at least 10 lakh capital is required. There are many people with a smaller capital, they want to join, and we advise you, please don't join the workshop if your capital is less than 10 lakh rupees. We have come out with a very good website where you can go and choose the date of your convenience, and you can pay, and you will be scheduled on that particular date. You can see in the description, and you can have more details regarding the content, etc. Mr. Karan Chawla, are we need to pay STT on option selling if we did not square off on or before the expiry? The first question, there is no not squaring off before expiry, so everything is on the expiry. If you don't square up, you still have to pay the STT. Remember, STT is charged only on the selling side, not on the buying side. If you are an option seller, you sold the option on the expiry day, you did not buy, then there will be no STT for you. Mr. Sai, after how long you gained enough confidence to become a full-time trader, and what were your major mistakes in the initial days? From day one, I've been a full-time trader because I did not have any other job to do. Second thing, what were the major mistakes in the initial days? In fact, in the initial days, I thought coming to the stock market itself is a major mistake. I always say stock market is like a movie field. Not many people can make it. By God's grace, I have made it. But surely I will not advise everyone to come to stock market. Many are saying we are in a bearish market, and others are thinking that it is bullish. What is your view? Forget about my view. What the definition says, if a market has fallen 20% from the top, that is considered as a bear market. And if the market is up more than 20% from the bottom, then it is considered as a bull market. So in the month of March, we tested 7,500, and then whenever it crossed 9,000, which is 20%. So it is considered as a bull market. So we are in bull market, there is no doubt about it. But at the same time, do not assume that because we are in bull market, the market should continuously move higher. Markets make two-way movements. They do not move in one straight line. Rahul, why are your workshops so expensive? Not all of us can afford, even if you want to attend. At least provide us EMI facility. I'm sorry to give a blunt answer. I teach you option selling. Option selling need large capital. because you need to pay large margin money. I do not want to encourage people with less capital. People who come to me, I tell them at least you should have 10 lakh capital if you want to become an option seller. So, if you cannot pay my fees, I am sure you do not have a large capital. You do not have a large capital, then option selling is not for you. I hope you understand. Mr. Anand, why people buy options when option selling is more profitable? It's an interesting question. Let me ask a similar question to you, Mr. Anand. When running a casino is more profitable, why the people choose to be gamblers? So the answer is very simple. Everybody can become a gambler, but not everyone can become a casino owner. Because you want to set up a casino, you need large capital. And it is a business, you can expect only a reasonable return for your investment. But whereas gamblers, they don't need large capital and they also expect very huge return. You can see sometimes people claim, I made 5 times money, 10 times the money. So that is not possible in option selling. Next one, Gautam, will Bank Nifty cross 23,500? Yes, surely Bank Nifty will cross 23,500. But when it will cross, in next 1 or 2 weeks, or next 1 or 2 months, or next 1 or 2 years, that nobody can tell you. Logically speaking, in future, the prices has to be higher. So, cannot give a clear answer because you did not specify the time frame. Next one, Mr. Satish, in Bharat Bond, what would be the maximum loss in worst case scenario? Forget about Bharat Bond. Anything you invest, your maximum loss is 100%. It is going to be difficult to tell you maximum loss is 10% or 15%. However, Bharat Bond is an ETF. They lend the money only to the public sector enterprises. So therefore, it should be reasonably safe. Next one, Balaji. Next one, Balaji, index has leap options. With the new margin rules, we see increased liquidity relatively in stock options now. Do you foresee in a year that leaps getting introduced in stock options as well? NSE had a case, that co-location case. SEBI has actually banned NSE from introducing new contracts for 6 months. So that 6 months time was over recently. Now NSE can introduce more contracts. In fact, there were rumors going around NSE might introduce weekly options in stocks. And of course, leaps, longer dated options also. When some instruments available for Nifty, why not for stocks? So logically speaking, NSE should introduce. But whether they will introduce or not, only the NSE will know. Mr. Suresh, next question. Sir, recently FD return has significantly decreased. Will it affect debt fund and liquid fund returns? Yes. Interest rates are going down in the economy. So that will affect all the instruments. If FD rate goes down, liquid fund rates will also be going down. Srinivasulu, how to put MTM stop loss, which broker is allowing? I think he is asking, instead of putting MTM stop loss, for individual script, and I think he is asking for stop loss for the entire folio. As far as I know, there is no such system, but in your trading terminal, you can just choose all the open position. In some place, the overall MTM will be shown, and the moment that overall MTM crosses your threshold, you can just click all the positions and square up just using one button. This facility is there in most of the trading terminals. So that should not be a big problem, but you cannot put the stop loss prior to that. You have to keep watching the MTM loss and you have to exit manually. But one click, you can exit all the positions. So that provision is there in most of the softwares. Next one, a kill. In intraday option selling, the time decay advantage works only on expiry. Do I get same time decay advantage in weekly also? Actually, the answer is there in his question itself. He has stated himself very clearly, time decay advantage works only on expiry. The time decay will be proportional to the expiry time. Say for example, if you have got 1 week expiry, at the end of one day, only 1/5 of the time is gone. So the time decay is only 20% of the total time. At the same time, on the expiry day, from 9:15 to 3:30, the entire time has decayed, which is a 100% decay. So it is natural that as you go closer to the expiry, and time decay is fast. So therefore, you cannot get the same time decay effect on every day. Next one is Srikanth. If I am buying liquid Bs in Zerodha, the collateral I get is 90%, which is equivalent to cash. Do I still need to keep some cash in my account before initiating an option sell? For my booked loss, I will ultimately have to pay them in cash. Yes. Number one, if there is any loss, that's a booked loss, you have to pay by cash. Do you need to maintain some cash component? It is not mandatory, but always it is better to keep some cash. Sometimes when you do some strategies that involves both buying and selling, the buy option, the money you have to pay immediately. Whereas the sell option, that money will be coming to your ledger only tomorrow. So therefore, if you have only collateral, you cannot execute the strategies that involves both buying and selling. So therefore, it makes sense to keep some small amount in cash, though you are using entire collateral. Next one, Sagar. For covered call, if I have the same shares, same as the lot size in my account, will there be extra margin required? So he says, if he is having the physical shares in his demat account, and if you want to sell a call option, do I need to pay the margin money? Yes. In India, there is no link between your demat account shares and the futures and options trading. So your computer system will not know whether you have the shares in your demat or not. Therefore, whenever you sell a call option, you will have to pay the full margin. And the full margin will be span margin plus exposure margin. However, instead of having the shares in the cash market, if you are having the share in the future market, then you want to sell a call option, then there will be some margin benefit. And because call option, you need to pay only the exposure margin. You are holding future long, selling a call option, then span margin will be 0 for call option. You need to pay only the exposure margin. Right now, exposure margin is only 2% for indices and 3.5% for stock options. Darshan, Bharat Bond 2 Is it better than the first one? Sovereign gold bonds, good investment. Number 1, Bharat Bond 2 is better than the first one. It can be seen in two different ways. When the Bharat Bond 1 was launched last year December, if you have bought it directly from the fund house and you are holding until maturity, you would get about 7.5% interest. But whereas now you buy directly from the fund house, the interest rate, if I am not wrong, it is less than 7%, around 6.8%. That is one way of looking. Another way of looking at it, Bharat Bond 1 is being traded in stock market. You want to buy that or you want to buy directly from the fund house, your return will be more or less similar. Because the Bharat Bond 1, which was issued 1000 rupees, now trading around 1080 or 1090. So that premium you have to pay. Normally, in an economy, when the interest rate goes down, the bond prices go up. So Bharat Bond 1, it is already trading at a significant premium. So now you want to buy 1 or 2, it's more or less the same. But however, from the option writer point of view, you buy Bharat Bond 1, you can pledge it and you can start trading immediately. Whereas Bharat Bond 2, you apply, they may take few days to credit the bonds into a demat account, and I do not know whether that will be immediately approved by NSE or not. Last time NSE took more than 2 months to approve Bharat Bond as a collateral. So that danger is always there. At the same time, you buy directly from the fund house, you don't pay any charges, whereas you buy from the stock market, you are liable to pay brokerage, service tax, stamp duty, etc. etc.